Okay, so we had our morning events. If you remember earlier this morning, we were tracking, or I was tracking the bulls came in here. I have marked them out in levels just so this is a little bit easier. And the bulls were able to hit, and they were successful. The bears came in here and immediately just fell apart, having a hard time. And one of the things that was the issue that it looked like was that the bears were not holding the bag. The bulls were having a hard time getting the bears to get pulled in and interested in paying. So what we needed to see, the expectation was to see the market hunt out more bears. So the market leaned down. You could see it actually got to right about where the stops were here for these bulls. Now, the reason that it hit those stops was because the bears weren't holding. You don't have a counterparty, you can't pump a market. And so you got to be careful about becoming the liquidity. Well, once it dropped down, we had the velocity show up right there, trapped orders right on that. This is just tons of liquidity for the bulls. This was a bullish liquidity spot. It was a great spot. Now we're looking for bears to hold the bag. Remember, that's the objective. It is a nice spot. It's a beautiful low. We had a retest of it. This is just so nice. We still need a counterparty to pay. We need someone to pay. Pumping the market on your own is expensive and it puts your capital at risk. Okay, so taking a look here, the market leans up and we had a bearish sample. How does this work? The velocity crossed positive. People saw positive momentum numbers, a +3 or something, and they were like, yay, so they wanted to buy. And you see those red bars? We had red bars show up and show us the volume after that signal. People saw the numbers, they filled the orders, those were bundled up into bearish liquidity. And these bears failed miserably. They didn't do anything. Right after we have the bulls show up, you see that? So the bulls, I think, found a party to take advantage of. The liquidity shows up, and sometimes the bigger institutions don't necessarily eat it, but there's always the shadow groups. Those are the people who just track the institutions, and they don't really know if the institutions are there or not. All they're wanting to do is to act like institutions, so they will execute before knowing what's going on. So we'll have shadow traders hanging on here. Can we get the shadow traders to hold? That's the question. Can we get those bears, the people who did consume liquidity, to hold on? That's the question. Now, as the market moves, the bulls are able to pump the market up a little bit here. You can see tension continues to rise until about here. And we have some switchbacks where the market goes back and forth, and it gets a little bit noisy as far as I can tell. But you could have tracked these and said this was bearish, and it moved down, and we do see the bears hitting here, but they have another position underwater, so that's a double down. We've seen this before. And right after, velocity again dips under. You could track that, and you could say that came to about here, and that's positive, but it's at about the same price here. So again, we're getting a position that's starting to build right about there. Now, the objective again is, can you get the bears to hold? It's the whole thing. You can't pump tension if you can't get somebody to hold the bag for you. You can see that we had that overnight gap up, right? And we were trying to do that on Friday. Well, that gap up stopped that group out. And you see what it did to tension? It was because they were able to wipe out a group that they were able to get tension higher. So same thing here. Can we get them to hold? Well, take a look. The bears were able to push it down. And they got it right to this position here. And the question you have to ask is, bears, what are you doing? What are you doing? We don't have an elastic market. The bulls showed up here and hit. They did not give the nod. This is not elastic. And elastic is where the dominant party, you could see the bulls give the nod and say, you guys can take it down by failing to do anything. They did not do that this morning. The bulls showed up, hit, and said, yes, please. The bears struggled to hold on. It was terrible. And then the bulls were like, oh, we need a better party trapped in. So they came in, and here again, they hit. There was no nod. There is no nod. So the bears are trying to do something. I call these eager bears. What is an eager bear? It is a bear trying to run an elastic market where you have not been authorized. You're way too enthusiastic. No nod, no elastic market. So at this point, you might be tempted to say, oh, well, they're going to run an elastic market. They're going to try and drive tension down. Yeah, but they didn't get approved. They're not approved. And then the next thing you have to look at is say, well, if these guys are going to run the market out, and we dealt with this logic, 2 or 3 days last week, they have to get it down and liquidate these guys. So they're going to need to do some work. Are the bears going to push out the bulls, especially the bulls' root position? Remember, there's two types. There's a root and the origin. The root is the intraday. The origin is the beginning of the trend. You know, if you have a major trend, this is like a daily or something, your origin is going to be way down here and you'll have roots all the way up. And it's the way you manage intraday markets. Are they going to be able to push out a root position after that there was liquidity generated, basically a bigger fish? Are they going to be able to do that? Well, they didn't get an elastic market, so they're not approved to do it. And this position has 2 hits on it, and both of them were able to pump tension. This has 2 positions on it, and one of them was a loser. This is the second. This is a double down. Now the market comes down and pushes, and at this point you need to be asking yourself, well, are the bears or are the bulls in control of this market? And are the bears approved? No. You can't do it. So the market pushes down, retests these guys, doesn't put any pressure on this stop. And at this point, we can start to say, at this point, you would need to, and this is a little bit looking back, I know hindsight 2020, you need to say, no, they didn't get approved. This doesn't make sense. And that's difficult to say now, I know, because it already happened. But the issue that the bears essentially ran into today was it was an unapproved. These are eager bears. They are, which means they're selling an elastic idea before it's approved. And this is an issue. You can't, they're jumping the gun. And this is not a rare event. We see bears jump the gun a lot. And bears have a propensity to sweep markets down. So you do need to pay attention. And you do have to be careful. You can't just do what you want. Our goal here is to track this and to figure out what they're doing. Now that we have this position here and this position here, we know where they are. We even, I haven't marked this one out yet. We haven't, let me get that the right color. There we go. We haven't seen the bears able to actually get any work, see them get any work done. They were able to they were able to accomplish this. Now, if they had been able to get this down through here and then hit that, at this point, at this time, then I would change my stance. I wouldn't change my stance all the way down because until they actually pull it off, why would I believe the bears could pull it off? And at that point, I'd start looking at the market a little bit differently into today's close and through tomorrow. But right now, this is just the same story we saw yesterday and the day before, Friday and Monday, Wednesday, Tuesday, Wednesday, Thursday, all the days last week. The bears come in, they mess up, and in this instance, they messed up the elastic market. They jumped the gun, and now this market is going to go right up to here. We're going to take out this group, and this group, probably all at the same time in one fell swoop. That would be the easiest way to go about this. At this point, because these guys have been here for a while, they're inoculated, they had some successes, but not really. They didn't, and when I say work, I mean, look at this. They didn't hit stops. So 1, they didn't take out anybody. 2, they didn't pump tension. And 3, they didn't really accomplish anything in terms of price. Like, they didn't get any new lows or new highs or get a range that was 4 or more advantageous, or they didn't get anything done. They just caused a range and failed to get any work done. It's not successful. It was scary, sure, but it's not successful. So what we need to see now is not more bear positions. This is not, we don't need a sample right here. This isn't what we need. What we need is to see this position, which is probably the best spot the Bears have today. I know this looks good, but it looked to me like they were having a hard time and they were really skittish about this position. This is the one I think that is the best. This position I want to see get liquidated. They have done, you see how nice and careful this is? They didn't move too quick on the way up. They let them feel right about it on the way down. This looks really good to continue to churn those guys out. And this is the one that's going to be suffering. These guys are in a good spot. They were able to pick up this contract. Now, one thing I want to make a note to, that you have to pay attention to this kind of stuff. It's sort of meta. It's like up here. This was a legitimate long position, and it did fall apart here. So we did have a long this morning that really had a hard time picking up those bears. So because they couldn't get these guys to hold on, I call that spinning your tires. They got what they need. They spin the tires, you know, and they're unable to really liquidate much. They can't get them to hold. So, you know, you got what you need and you hit the gas and you spun out. That's what this looked like to me. And I posted about that this morning. And that's what I meant. The bulls couldn't get those bears to really hold on. And it was going to put pressure on them. And that's why the market leaned down. They spun their tires. Spinning your tires usually gets you pushed out of the market. And they did. So that's what spinning tires is. You can't get the counterparty to hold on like you want them to because they just keep letting go. And the Bears actually had this problem yesterday. They spun their tires. They couldn't get any bulls to hold on, and that's what screwed them over. So once we got here, we saw that these guys and these guys are now holding on. So they found some traction. How do we know that they held on? We look at tension. We also can see that this position and this position are shadow positions. We didn't see the tension accelerate up. We had some upward movement here, which meant that those bears probably let go of some of their position. This one, we have a move down out of it, which is really good for bears. So we could see the bears are here. We could see that they tried something. They impacted tension. Now the bulls can grab a hold of that and, you know, coming out of this thing here, right about here, everything really looks pretty clear. We've seen what's going on. We know what the game plan is here. We know the bulls are here. Right about here, everything looks pretty clear to me. We're going to start moving up and we want to get up to this level. We want to blast through this here and even higher. We want to get even higher because those bears were found. They got in. The tires found traction. We've got everything we need. Okay, so to the upside, what do we need to see? Just a good old-fashioned move up. The same thing this is the same story we've seen before. It goes, the bears make a mistake. It's like, oops. In this case, they were eager. They front ran elasticity, which they did not get. They make a mistake, and then they pay for it. The bulls are essentially patient. If you picked up a position here, and you saw that this wasn't quite working, and you did take a loss, hopefully you recognize that way before that it got all the way down here. And then at that point, I think you wait. You know, you want to see that they're going to play. You want to see that we found it. And then you see the test there, and you start going, okay, this is starting to look much, much, much better. And then you want to try and act after you figure out, you see the pieces there. I personally don't really like trading mornings. I like to kind of figure out what's going on first. And so, you know, some days I miss things, but the best time is to figure out what's going on, so you have a good sense of the market. It's been going on for the past couple of days. And then you could say, oh, well, I see what's happening here. It's the same thing. Bears messed up, trap them in, work your way up to their stops. But a side note, these guys did fall apart. So this is the first time, I think, in a while that we saw a good position break. The first chink in the armor, maybe. Definitely the first time we've seen the bulls have a decent position, trap in the other side, and then just spin tires out. So this is the first time we've seen that. This is a bit of a character change. Think about it. Pay attention to it. What does it mean if the bulls come in and inject capital and the bears just let it go? The bears are all skittish. Now, it's not the attitude of them being too arrogant. It's that the bears were spooked. So this is a character change. We haven't seen this particular thing from the bulls where they weren't able to pull that off. But everything went back to normal, and now our expectation is just to knock them out. Who are we knocking out? You should be able to pick out. It's here and here. Potentially some lingering bears from here. Potentially, because we didn't see a full-on acceleration here. It was moving up. It just didn't work for him. But mostly this is, in my opinion, this is the root position for the bears. That was their best spot after they kind of had some things going on. I think that's the spot. This is the spot that's going to be paying, getting up there. And this is the group. These are the groups of bulls that are essentially taking advantage of that. It's these guys. Okay, so that's where I'm at here. Now, moving forward, there's only a couple minutes from here. Tomorrow, we're going to have a similar market that we've been seeing the last couple of days. It's like, oh, so overnight, a move up. Yeah, that's the anticipation, yes. We got through all the positions. It would surprise me to see prices go down like this, because that would mean these guys and these guys had a winning position, and then they just failed to take advantage of the liquidation that they had in front of them. They didn't get to where I expect stops. This would shock me, a move down to new lows. It wouldn't shock me if prices moved up first, hit all the stops, and then moved maybe back down to the range and did something else. That wouldn't surprise me. All I can see with this is it makes a lot of sense to move up and push a new high into the close or overnight because of those stops, because the bears jumped the gun. They made a mistake again, and we have the opportunity and means to do so. Tomorrow, the thing to pay attention to right off the bat, again, the issue here that the bears have been having a problem with, the reason this market kind of looks this way, is because the bears have been waiting for elasticity. They're waiting for bulls to move. It hasn't been working. So they thought they had it here. They ran it. They hoped they had it here. They tried. Not working, not working. So we're looking for an elastic market. That means the bulls get liquidity and do nothing with it. They don't hit. It's not about failure. It would be if the bulls, got this liquidity here and then price just sort of did this. They didn't hit. They didn't impact tension. It all just sort of drifted through it. At that moment, you could say, hey, the bulls just missed. That's the nod to let the bears know that they can come in and drive things down. But at this point, that's just not working. So this whole thing has this smell to it. And if you're a really experienced trader, you might smell it too. When you have a condition that keeps working and screwing over one side, it starts to smell like a channel. It might not look like a channel, but boy, it has all the earmarks of a channel. You keep getting all these sell signals all the way up. They never work, and all you had to do is buy and hold. And at the end of it, you have the same response. It blows out the top. Now, in terms of retrace, I don't know if that this type of idea would work as a retrace. I mean that when you have a concept that constantly screws people and betrays them, eventually you get a blowout from all the people who thought they would hold on, and those blowouts are usually wonderful. They're just lots of fun. So I'm viewing this overall as like a channel philosophy, where that we betray those bears over and over and over until eventually there's a pretty decent wipeout. Tension would get a little bit hotter, or price could get hotter, doesn't matter. And then we see the elastic market actually come in. I'm trying to prep you for tomorrow and the next day, because it's probably going to come in the next couple days where that we see an elastic market actually show up. And you got to be ready for it. You need to know what it looks like, so when it shows up, it's the bulls get something, right? They get, so like velocity tests 0, and then price just, we get the volume there, and then the price just goes like this. And see, this would be velocity, this would be price, and we had tension just goes like that. And it's like, bulls, you did nothing. This would be a nod. At that moment, you say, once you have a nod, you say, look for bears. You don't just jump in, you say, well, where are the bears now? And the bears need to come in after the nod. and then they'll want to try to drive it down. So you should expect a concerted effort by the bears after the nod. That would bring tension down, and the bears could get something like that. I don't know if it'll happen tomorrow. I don't know if it'll be the next day, but we've been prepping the market for this by simulating failing, and it's going to show up. You're going to see it, model it, track it. You'll be like, there it is. This is the thing. Okay, so price moving up. We're probably going to get through those highs right into the close, hit the stops. Hopefully you can see how this worked. This was the bulls spin out. They get another go, and the bears caved right here. Bears messed up. They jumped the gun. The bulls said, okay. And then they lulled them into a false sense of security and popped it up. All you had to do is track the positions and use your imagination. I don't know, your intuition about how these things work. It should be pretty clear what's going on. Miguel says the bulls from the morning were shadow bulls. No. Shadow, when I say shadow, I mean they do not impact tension. So to be an actual bull or a bear, you have to trade laterally. So there are 3,060 stocks in the New York Stock Exchange. If all of them cost $1, which they don't, you'd be putting down at least $3,060 just to fill a contract laterally, The institutions we're tracking do that. So they impact the entire stock market. We're not tracking futures volume or SPY volume. We're tracking the stocks. If you're actually a trader, an institutional position, you're lateral. If you're a shadow trader, you act that way without the impact. So you're going to try and buy when they buy, but you definitely don't have the cash to be as laterally huge as they are. So what's useful about that is if you were to buy here, we would not see tension curl up like this. You see that? Tension would move maybe flat or something. And then the people that they liquidate are not major institutions. Hitting their liquidation zone is just going to be stopping out the shadow traders who are trying to keep up, but we're unable to measure the impact of an institution. So they're shadow traders because they have no impact, kind of like how a shadow has no real impact on the things it goes across. They do have stop losses, and those are real, and the market will hunt those out because it knows they're there. But an institution, like this morning, we see that there's our setup. Decay moved down. There was a price response and tension impacted. This was a legitimate position. This was pressuring their stop and hitting down there where their liquidity was, and there was a little bit of an acceleration there. And we had another signal right on top of it. It was double the liquidity. It was 2 times the liquidity. There's 2 reasons. And this looks a lot to me like teeth. You see the teeth? There's the position, there's the tooth. So if you're trying to get into this and you know that this is not the origin, this is a continuation position, you have to be careful getting into what you think is the first route. You're say, oh, I think this is going to go forever. You say, well, maybe we say that there's going to be teeth. And this is something I'll talk about more. Teeth is where that you have a root position and it bites the stop, and that's the tooth is where the best spot was, and today totally was teeth. The bulls had to get us a move down to shake out weaker hands, and that's right where the good spot was. So it's not something that I would trade. I wouldn't say trade teeth, but it's something that you need to keep in your head. This is a continuation. Anticipate some teeth. So this looks like teeth, but yeah, it was right on their liquidation, and this was the spot to pay attention to it. And I think everything was clear about here. I think this is it. If you were keeping up and tracking all this, I think it should have been pretty clear right there. The bears had made a mistake and the bulls were going to. So when I say shadow bears, you could see right here, there was no price response, and tension did a little bit. So there was a little response. This wasn't a great institutional position, in my opinion. So a lot of this is going to be, there will be shadows there, and the shadows definitely have stops we can hit, and they do generate liquidity because they're predictable, reliable, and you can package and sell it to a clientele. Look at that. So we're getting right here to this. Take a look at that. We have a little bit of acceleration right into the close. We got everything we wanted out of this move up right there. Beautiful. Look at the response. We hit the stops right about where we thought they'd be. Done. You're done. That was it. You're good. We're good. We're happy. We got what we wanted. This market's still giving us what we want. I know it can be a little complicated, but if you stick with it, your first thing is can you pinpoint the positions on your own without my help? If you can pinpoint all the positions on your own, then you have your base data set. You know where they are. Then you want to look at the characteristics. Did they hit? Did they not? How did they do? Did they get liquidated? Kind of, the social dynamics here. Who did what to whom? And then once you figure all that out and you kind of understand how the framework works, it should just be clear. I mean, I felt like, once we worked this out, we were about here by the time we worked it out, which is a little bit late. I'm sorry. Maybe I should have hopped in a little earlier. But bears messed up. It just kind of was pretty clear to me that they were going to get punished. That's what happens. You don't get to make mistakes in trading and then get paid. Markets don't do that. Either you do it right or you are the bag holder. So there we go. We got what we wanted. We hit our targets. This is great. So tomorrow, remember that potentially there's some lingering shorts that could possibly be around here. Maybe the market hovers around up here, eating up. Tomorrow, pay attention for elasticity. Why do I want you to be thinking about elasticity tomorrow? Because the market has simulated elasticity over and over and betrayed the bears. The bears are going to be and we saw that this morning, the bears are going to be skittish. They're going to be like, do this. So remember that. We have modeled this. So elasticity is starting to look better and better. Once we get it to show up, you'll see it. You'll say the bulls missed, there's the bears, and that's going to be a place where you anticipate institutional bears to come in and try and drive some elasticity. Also remember, elasticity is about cooling off hot tension. So negative 42 is okay. Negative 70 is really hot. That's standing on the sun. Negative 90, you're dead. We hardly ever see stuff like that, maybe like once. We get up to 60, absolutely. 60 is a great spot to look for elasticity. 50s is getting hotter. So if we get something like 60s or something, that's a good spot to start looking for elasticity. It's getting hot. This is a good place to burn off some of this tension. Look for that elastic market to come in. If it's like 30 or something or 20, it's like, well, elasticity. It's not even hot. Like it's maybe lukewarm, maybe. Okay, so that's what I'm looking for in the morning. That's what you should be paying attention to. You can also take a look at this is going to be a spot where I think that we could look at, I'll pull it up here, the Trade Trust Group. You can pull up this live charts and pay attention to this. When things start really blowing off, you'll see this move up to these extended levels. Now, when it comes to these levels that you're seeing on here, you get the ones with the bird's eye that are down at the lower, like 4,000 to 4,000. You got to understand the context that they're built in. I tend to like the bullish ones better. And when these hit here, these a lot of the times become major pivots. So if this does blow off and we get something like that, remember, this does not mean sell everything. It means this is a major pivot to pay attention to. And then carry that into tomorrow and watch for if we get elasticity right with a major pivot, we could see a situation set up to provide some opportunities. It doesn't mean the world is over. It's just, you got to pay attention to that. If we do move up and we get over the level, we could create another pivot and keep going higher. No problem. But at some point, we're going to have to deal with the tension rising here. Yeah, that's about it that I have for this. I hope it was useful to give a little bit shorter of a video earlier in the day and then come in here and kind of show how it worked out. I want you practicing this on your own. If I just walk you through it, then you're just going to depend on me, and that doesn't make you useful for yourself. You got to practice trying to figure out where they are and then compare it and see how you did until that you can. And if you don't understand, shoot me an email or shoot me a message on Twitter and say, did I get this right? Or am I misunderstanding that? Until that you can, because you have to be able to pick out where the participants are. If you can't pick out where they are, you won't make any progress. But once you do that, then it gets complicated, a little more complex, until eventually you're doing what I just did here. It's like, oh, well, this is going to do this. Like we can see where their stops are. We know where we're headed. That's where you need to get to on your own without me. And then you're useful. And then you can give me feedback that I can actually use. Until that you can read a market, know where they are, you can say certain things. It's hard to speak in this language. And it's hard to use if you can't do it on your own. You have to build your own convictions, and then it becomes very useful. And then your other tools will all start working out because you're like, oh, I get how this works. I see where the opportunities are and what's happening. Okay. Thanks for showing up, guys. I will pop in and try this format again tomorrow. If you have questions or anything, shoot me a message on Twitter. And if you're not watching the Zoom I put a Zoom link down below. There's no video, no chat, no audio. It's just charts. So you can pop in there anytime. It's always up. All right, guys. See you tomorrow.